Tax season, it's upon us. Last week we talked about tax planning for the individual. This week we're talking about tax planning for small businesses. But the question is, how is that different? With us now to answer that question, Michael Connett with The Savvy Investor. Michael, thanks for coming back.
Morning, White.
Great to have you here. So small business, I mean, this is everything from brick and mortar to like a home office, correct?
Yeah, mom and pop running something out of the house, dentists, doctors, just the small brick and mortar around the country. And it really is, it's something different. Planning for your individual tax return is completely different for people that have small businesses. And you still need to plan because you still want to make sure you're paying the least amount of taxes possible. But when you have a small business, there's so many different opportunities, and it's amazing. So many people don't take advantage of the opportunities that are there.
So on that front, some strategies out there for people that maybe have a home-based office or something bigger?
One of the things that we love and we see so many CPAs and accountants miss is for moms and dads out there that run a small business out of the house, you can employ your kids. I mean, think about this. You can get a little over $4,000 to each child. No taxes whatsoever. No self-employment tax, no FICA, nothing. So there's $8,000, $10,000, $12,000, depending on how many kids you have, you can take right off the books, basically tax-free. One of the things that we see people missing all the time is the opportunity to rent the house out. So if you want to entertain for business development, you can rent the house out 10 days a year and not have to report it as income. There are just certain things that you have to follow, certain rules you have to follow, but there's plenty out there, and people just miss it left and right because they don't plan. They don't sit down with a true financial planner or a true tax planner to figure out. All they do is sit down with a tax preparer at the end of the year and bring them a shoebox of receipts.
Interesting concept, because a lot of the smallest one-person operations would host like an event in their home,
right? And
this event technically could be written off in some ways.
In a bigger form, because think about this: paying, if you had to pay for to go to a hotel or a restaurant, you're going to pay a fee to be there.
Of course.
It allows you to rent the house from yourself. So think about that. You rent the house from yourself, and there's just little rules in there that say you don't have to actually pay tax on that rent. You have to follow certain rules,
sure,
but it's available to you. I mean, one of the big things we see all the time, especially for like dentist office and doctor's office and small practices, there's an incredible opportunity. We had a dentist came into us. It's been huge for us because he's referred as a Brazilian dentist. But he came into us and he was paying a little over $50,000 a year in taxes, working with the CPA. We sat down with him and we showed him how to create a defined benefit, his own pension plan. And people are always afraid of that because, well, if I do a pension plan, I have to pay for everybody else. No, there's rules involved. He had a couple part-time employees. We're allowed to exclude them. We got his tax bill down to less than $9,000 a year. And he was putting away about $150,000 a year into retirement accounts for him, and we're basically wiping out his tax bill. And all it starts with is sitting down with somebody and doing tax planning. Stop waiting till April to do your tax preparation. Do tax planning along the way. It's a huge difference.
And there are things you can set up in the current calendar year that pay off as we get to April, correct? I mean, that's key.
Absolutely.
That's fascinating because, you think about those smaller businesses, and they may have the impression, well, we're too small to do something like that, something on a large scale, or it seems like a larger scale, but that's not necessarily the case.
It's not the case at all. And really, if you think about it, you can either pay this money to Uncle Sam, right? And if you want to pay it to Uncle Sam and contribute to the coffers, feel free. But from our perspective, why don't you sit down with a tax planner and figure out some strategies? And I think the biggest obstacle is there's an associated cost. But the reality is, when we sat down with this dentist, his big thing was when we were talking to him about setting up this defined benefit and setting up a 401k, his big concern was that he was going to have to contribute to his employees and it would be too expensive. But when we actually showed him the numbers, he has to contribute a little less than $5,000 to his employees, but it's saving him $35,000 a year in taxes. It's a no-brainer.
Yeah.
But unless you sit down with somebody who understands those things, who actually knows it, you can't sit down with a financial advisor because, well, first and foremost, they're not allowed to give tax advice.
Yeah.
And most of the CPAs don't think about it because they're so busy doing the numbers on a day-to-day basis, and then tax time, they don't even think about tax planning.
Well, that's why it's important to have the total financial service package. You can find that with The Savvy Investor. By the way, you can also get a end-of-year tax analysis and review. Call their number there on the screen, 866-597-1040. 1040, that's a good number this time of year to be thinking about. And we'll be back with more Midday Maryland right after this. Stay here.